James McGovern, I decided to reply to your request to comment on your article you wrote titled Case Study Hard Money Loans, published February 26, 2025. You reference a lot of good information in here. And I first want to start off with by saying, the reality is that a lot of people that are posing as hard money lenders aren't actually hard money lenders, okay? Most people that are saying they're hard money lenders are usually white labeling institutional capital product or other institutions' money and closing in a different name at closing. And all they're doing is basically going out there and printing as much loans as possible, okay? They have a box that they can lend into, and they're at the mercy of the actual capital provider for the rules and guidelines on how to go about getting loans done. A true hard money lender is somebody that has their own money in a bank account, that makes their own underwriting requirements, that can waive appraisals, that can waive credit requirements, credit restrictions, and everything else in the process. That's a real hard money lender. The term hard money has been thrown around by unexperts, non-experts inside of the industry now for about a decade. It really got bad in 2017 when the fix and flip loan was securitized. That's what people don't understand. Everyone says, oh, I need hard money. It's like, no, you need a non-QM loan. Oh, I need hard money. No, you need a bridge loan. Oh, I need hard money. No, you need a construction loan. Hey, I need hard money. No, you need a foreclosure bailout. People just think everything outside of Fannie, Freddie, FHA is a hard money loan, and it's not. And I've been preaching that for forever. Back to your article in particular, you reference charging upfront fees. You're 100% right. Many people rob people, but doctors, when you go and get a consultation, you pay for the consultation, right? If you want to get a personal trainer, you pay for a consultation. So people that charge relatively, let's say, fair-minded deposits, I believe they're fully entitled to doing that if they're actually providing value and giving guidance. You have a lot of inexperience in the market. You also have a very ever-changing landscape in the lending environment where when the banks change policy, the institutional lenders change policy, and then the hard money lenders who aren't hard money lenders find out when they get that next deal. It's unfortunately like the boiler room mentality. I had a friend last week. I said, hey, how's your brother-in-law doing? I haven't really seen any action on social media from him. He's like, oh, yeah, he's basically not doing real estate anymore. He said he's going into the MCA business because he can make $30,000 a month for doing nothing, right? So it's unfortunate that there are people out there in every industry, every color, every race, every demographic, every sexual preference or orientation, male or female, that just aren't good people. But validation of people and track record speak for itself. So me personally, even on commercial loans, commercial mortgages that I facilitate, depending on the client, I usually do charge an upfront deposit, which goes as a credit towards my commission when the deal closes. Because what if I do 3 weeks of work for you, right? 3 weeks, structure the deal goes into the bank, and rates drop, but you chose to lock in your rate and go to another bank. I shouldn't be out my time. Like, I don't get a salary. I work for myself, right? So I believe that the industry does need additional guidance and changing. I read your, quote on insurance. Yeah, we require contact information for insurance, specifically on refinances and on purchases, to update the insurance. Now, based on what you said in your article about them requiring more insurance, we have no interest in doing that, right? So somebody that did that, maybe there's another reason, and there's always two sides to the story. Now, I'm not questioning your credibility at all by any means, but I only heard your side of the story. So I'd love to actually get the actual lender on the line, and even State Farm, I believe you said State Farm in the article, and hear the true side of the story, because most lenders require full replacement cost, and that's what they insure against, right? The next component is rates and fees. Institutional rates and fees are much lower than true private cost of capital. If somebody lends at 12% after factoring in taxes and risk, let's say they net 7%. You could put your money as a high net worth individual in bonds at 5.5% and 6% with zero human risk, right? So again, everything is relative. I'm a big believer that if nobody else is going to do a deal, you're going to pay a premium for the capital, right? If everyone can do your deal, yeah, you're probably going to be able to negotiate a rock bottom rate. So I'm the first person to say the industry needs transformation, transparency, education, and obviously vetting of people that are saying they're hard money lenders, which is why I have nearly $250,000 invested into Loan Links, which we guarantee every lender on the platform has their own capital, has their own box, and is a verified lender. Also keep in mind, this isn't a business where you're like shopping for a car. When you're engaging someone to do work and spend time reviewing your documents, there's a cost associated with that, right? But LoanLink's number one focus is bringing a transparent approach to lending and making sure either the broker or the borrower are being directly connected with true capital sources, the decision makers that don't have to answer to anybody else, that they answer specifically to themselves in hard money and bridge loans. Because I see people get hurt all day long. Literally, we're working on a deal right now where it's a true private money deal. I have a high net worth individual funding a deal in Fort Lee, New Jersey, and the lender stopped funding the borrower's draws just because they chose to. They probably ran out of money or they had other issues going on, and we're stepping in and bailing out a client that did 2 prior deals with this lender, and there's obviously something going on in that side of that lending institution, but we're stepping in to save the day. I have another deal in Newark, New Jersey right now that I'm on the fence about taking, that a lender lent $300,000 less than what an actual construction would be to complete a brand new ground up development project. Because you have a bunch of jerk offs sitting inside of a room talking about how much money they're going to make on a deal rather than focusing on the client's best interest, right? And anybody that you will ever speak to about me in this industry will tell you I've never once ever facilitated a deal for somebody, especially in the hard money space, that wasn't in their best interest. I lay out all the pros, all the cons, and more of the industry needs to take ownership of that. I take a human approach to this business, right? Am I the cheapest? Absolutely not. Am I the most expensive? Absolutely not. Every client and every deal is priced accordingly based on risk and the amount of work that goes into that deal. So keep that in mind. Yeah, there are a ton of bad people in every industry, every business, but streamlining the process and making sure your team, think of a hard money transaction or any type of real estate transaction like a fantasy football draft or a fantasy sports draft. You want to draft the best damn players, best attorney, best title company, best insurance company. And oftentimes people shop price, and like the cheapest attorney is probably going to be the most inadequate, underqualified, under-responsive, right? The insurance company that's quoting you the best premium is probably not going to give you the maximum insurance. And then a title insurance company, same thing. All the people that are shopping price are actually not really doing the right thing from a quality standpoint. It's like asking Tom Brady to take a pay cut and to play, and win championships for $900,000 a year. No, that guy's worth $30 million a year because he's proven has a track record, right? We have to start looking at lending like that. You get what you pay for. If you're getting the cheapest rate and points, it's because somebody's desperate and needs your business or doesn't care. That's the problem. And when this institutional market and these banks start blowing up because of commercial real estate defaults and other defaults in the fix and flip space and the non-QM space, because the game's over and we're at the end of a cycle and the cycle has been extended 8 years, if not just 4 years post-COVID, shit's going to hit the fan. So I hope this properly answers what you were looking for by posting your article on my wall. I would love to speak about this with you directly on my podcast. If you're in New York City, I'll host a podcast episode just to talk about this topic. If you want to go live on another channel, Zoom, I'm happy to do that as well and invite everybody along. And I'm sorry that your son had that experience. I have a son, and I always say that, if you're going to fuck my mother over, we're going to have a problem. And it's unfortunate that many people in this business have hopes and dreams of building a great fix and flip business or doing a great ground up development and get caught with a bunch of joker brokers or jokers and pretenders that end up losing everything and getting fucked. I see these deals all day long. Most of the deals that come across my desk in this market are deals that borrowers were lied to by other capital sources, banks, lenders, institutions, whatever, and they call me to figure it out and save the day. So I wish you the best, man. Happy to guide your son in the right direction. I would even actually have a free hour call with your son and point him into true fix and flip or ground up development lenders, great A+ people that do billions of dollars a year in business that I have direct access to. I don't even want a fee on it. I would do all your son's deals for free for life to make sure that what happened to him never happens again. Hope to hear back soon.